Hey traders, checking in on the stock market today. So some solid bounces out there on the daily time frame getting going, but Apple and Amazon earnings coming in after hours. We will see if those bounces are all for naught, and some psychology and mindset to go over. Something happened to me today outside of the charts and some reflection. So when we last checked in yesterday, we had the NASDAQ futures chart with the hourly equilibrium shaping up in response to Facebook bullish earnings reaction. That broke bull overnight. So we had the higher open, the bears controlled the morning after the higher open, but a shift took place. And when that shift took place, all of our major sectors were at the high of the day at the same time. So let's pinpoint why was today different than yesterday and how the bounce shaped up. And then we'll talk about the after hours earnings reactions in Amazon and Apple that we have right now. So a very similar day to yesterday. And remember yesterday, let's go to QQQ, but yesterday we had the 2-minute stair step to start the day. We had a top fishing play on an attempt at a bull flag that failed. And then today we had that at one point on the 5-minute time frame, higher or low every candle, lose that pattern here at 321.08 and follow through for the bears. Not a ton, but a pullback of more than 0.5%, which certainly keeps that a play to be looking for. And there was the same thing where we had not only the stair step pattern breaking, but a 5-minute bull flag attempt, which double topped at resistance, another bear top fishing play that then rolled over into further consolidation. So the bears got a little win out of that, but then the bulls turned on the jets. So look at the 15-minute time frame. It's fairly similar. The biggest difference is how the morning started yesterday, big bull move and then gave it all back, as opposed to higher open and then giving it back. But let's just go from the drop to the low of the day, the bounce, the 15-minute higher low. Drop to the low of the day, the bounce, the 15-minute higher low. We changed the 15-minute trend yesterday, just like we changed the 15-minute trend today. It happened yesterday right around noon, happened today right around noon, a little bit earlier, but roughly the same point in time. The biggest difference, we failed the high of the day and rejected, as opposed to breaking the high of the day into continuation. What were some clues? Look at the volume. Couple candles of increasing volume, and then volume just dies as we reject from resistance. Increasing bull volume every 15-minute candle on the way up as those resistance levels break. And yesterday we didn't see all major sectors up at the highs at the same time, and today we did, giving the bulls that follow through. So daily bounces are underway. We know that means we zoom out and scout daily lower highs to be the result of that bounce. We watch retracement size to determine, is this going to be a bear flag on the daily bounce, or is it going to be significant enough to not be a bear flag? For me, I'm going to keep it simple and say a bear flag is going to be on the table for me as long as daily EMA 12 is resistance, which rejected the last bounce attempt, along with, again, that quadruple top that we could see from space that everybody was watching. To go along with that quadruple top, the S&P 500 has a quadruple bottom that everybody can see from space. I think that's Lori's tagline that I stole. But we bounced off of it. And so now the question is, can this level hold? So we have the earnings reactions after hours to Amazon and Apple. Amazon is a bearish reaction to earnings. Let's just look at it. So Amazon, we can see we dropped down and we are at the low 2600s, which puts us at fresh fear lows. So we broke support, bearish reaction on Amazon. Apple is a bullish reaction, but not by much. It's not offsetting the weakness of Amazon. Apple's bullish reaction, and I could see it happen at 169. They put up a big wall. Could have sworn it was 169. I guess it was 170. Either way, I thought it was 169. If it was 170, they put up a big amount, a very large amount of shares right at that level. It was 170. And we rejected from it, and then rejected from it a second time. And as soon as that double top happened, momentum shifted. So I now know in the short term, 169 is a clear, 170 is a clear level that the bulls have to get over for continuation. And we do have the guidance still to come out and the conference call. So essentially we could say if Apple bulls are going to try and help offset Amazon weakness, we need to see a bull break of 170. But right now we're green, just not by much. 166 puts us a little bit higher. but certainly not a notable bullish reaction. So in the end, where does that leave us with the NASDAQ? Well, the NASDAQ is still an hourly uptrend, but we're pulling back pretty significantly. So this is the kind of scenario where if I'm a bear scouting a daily lower high, we've also got 12-hour resistance here. So resistance where we topped out on the bounce from yesterday is still resistance, a little bit of a double top there, and that's going to be aligning with daily EMA 12. But we can say that an aggressive bear scouting a daily lower high is watching on this hourly pullback. We know we're looking for a higher low because of how much space we have to form it, but the more the pullback, the more likely an hourly lower high is the result of the next bounce. So just like we looked at on the 5-minute, just like the 2-minute yesterday, if the pullback is significant enough to create the space, step one, the bigger picture, larger time frame is favoring a lower high. We know the daily is favoring a lower high. So we got that point. That's a puzzle piece of shaping up the trade. The second puzzle piece is a big enough pullback to create the space for a lower high to be the result of the next bounce. The third step is bouncing on the hourly and setting an hourly lower high. And then the fourth step is confirming an hourly downtrend, which is the first indication that the daily lower high is indeed shaping up. So that's what we're keeping an eye on in the short term. If we were to top out from here, again, if the daily EMA is 12 is resistance, I am going to be considering it a daily bear flag. I'm watching this support level. If the bulls in the S&P 500 were to put up a daily bounce, and it's still possible, it's just less likely with these earnings reactions right now, but if they were to put up a bigger bounce, I personally would potentially look for a longer term IRA swing position, looking for a daily higher low playing off the quadruple bottom. So this is me looking out and saying, okay, well, maybe next week, we got to be aware of the FOMC next week, of course, but maybe next week, if a big enough daily bounce takes shape, if the bulls can prove something to me on this daily bounce, then I look for a long. But I can also just look at this and say, well, if that's the top of our daily bounce because of these earnings reactions, then I am less interested. Long story short, I'm keeping a close eye on this quadruple bottom and watching to see if any kind of trade game plans can be established from it. That's what my bigger picture IRA mindset is. My shorter term mindset is, okay, we've been in full on bear mode. We know daily bounces are inevitable. And right now this daily bounce is not proving anything to me. I'm scouting daily lower highs to be the result of these bounces. It's just a question of, are these bounces topping out now, or do we get a couple days before they top out? The last time we bounced, it was a 3-day bounce before we rolled over. So the hourly trend is going to be our guide. And we're watching for the futures to potentially shape up a big enough pullback. You can see the S&P 500 pullback is not as large. Obviously, the tech or QQQ is more subject to Apple and Amazon. Again, that's something like 18, 20% of their entire holdings. So just looking at comparison, retracement size, what is the probability that the S&P 500 sets an hourly lower high? Well, the retracement's 40%. And we look at the NASDAQ, and its hourly retracement is 50% plus. So we know probability-wise, the NASDAQ would be more likely to set an hourly lower high than the S&P 500 due to the size of the current pullback. But that's what I'm watching tonight. And next, it's going to be all about Apple's guidance. SMH daily bounce underway. So again, SMH divided by QQQ, good observation today in the chat room. And that was from What is Stop Loss? So shout out there. He was pointing out the trend change on the daily shaping up for SMH QQQ, showing relative strength forming for the semiconductors comparative to QQQ. The last time we saw that happen was end of January through the first week of February. So what was happening on SMH when that took place? It was this bounce. So definitely worth paying attention to because correlation shifted a bit. We now have a bullish correlation. And it's the same thing that I pointed out with BABA yesterday. Why I was keeping an eye on BABA yesterday was because BABA divided by QQQ was showing us signs of the correlation shifting. Bear correlation forever, shifting, and a couple days of bounce follow through from that. So again, just checking in and showing different ways to use these ratio comparisons and these correlations as just little pieces of the puzzle Again, it's just not, you don't look at that chart and say, I'm longing semiconductors. You look at that chart and you could say, I want to long semiconductors. And then you go to the semiconductors chart and you formulate your game plan based off of those clear levels and your stop loss and your target and evaluating your risk and reward. But it helps as to where to be looking in terms of, if we're going to bounce here, do I want to be looking to play Netflix bullish or do I want to be looking to play NVDA bullish? But in the end, we're scouting daily lower highs and SMH is going to be similar. Anything under 253.27 is just a daily lower high. There is a downtrending support line we can potentially be keeping an eye on here still. So didn't break that support line. But we certainly know that daily trend changes are needed across the board in many of these ETFs. And to see a daily trend change, we need a big enough bounce to create the space for a higher low and higher high. So we're in the process right now of how significant is this bounce? What is the bounce retracement? How much space is being created? Can we shape up a daily trend change from here? And just one day of bounce information is not enough. We're going to get a bunch more information tomorrow and then some more on Monday. Tesla, big bullish reversal candle on the daily, big volume behind it. Hourly, have we changed the trend? No. So low of the day, bounce, anything under the high of the day, just a lower high. So we would have to hold 821.70 and break 895 and 900 tomorrow to confirm the hourly trend change and for the daily bounce to be underway. And Tesla, like many other names, tons of space for a daily lower high to be the result of this bounce. Improving still to be done for Tesla to confirm an hourly trend change. We know a daily bounce is not going anywhere without an hourly trend change confirming. Healthcare, little bounce underway. Again, it's a very weak one at this point. Nothing is standing out here. We're just noting that all of our major sectors were green and at the highs at the same time, but retracement size on the bounce is very minimal. Bears are still strong overall. We need multiple days of bounce if we're going to create space for an eventual daily trend change to try and take place. Financial sector, same deal. Daily bounce is underway. Anything under 38.32, but a ton of space for that lower high to form, and it's a very weak bounce at this point. We need multiple days of follow through. We don't even have an hourly uptrend at this point. So lots of proving to be done. IWM, same deal. Not going to repeat myself, but need the hourly trend change. Then we zoom out and scout a daily lower high, and we watch our bounce retracement size. You guessed it, biotech sector, more similar to Tesla with the candle. Bears did get a lot of follow through there to the downside before the bounce started shaping up. Very similar to Tesla. Need the hourly trend change for us to zoom out and scout the daily lower high. So essentially, what I am saying right now is exactly what I said the market video of April 25th. Okay, a bounce is shaping up. We need hourly trend changes to confirm if we're going to be looking at any daily bounce follow through. And names like Tesla and XBI that have not done so yet, maybe tomorrow, they don't. And bears keep that complete control. So again, we have to be watching skeptically. I don't know if that's a word, but I'm skeptically watching any bounces and making bulls prove it, knowing that if they prove it on the initial bounce, there's no FOMO because I will be patiently waiting, looking for the higher low to be a result from that bounce. So many names do have hourly uptrends, but handfuls still have to prove it. MSOS, so checking in on the cannabis space, I made a post today on Twitter, literally right at the bottom, where it was just saying, I've been, again, following this sector for 11 years. This is if not it is tied for the most bearish sentiment I've ever seen in this sector. And I posted that right at 11 a.m. And of course, that marks the bottom, at least for a short-term bounce to cool off RSI levels. But it is just, I got a question on Twitter the other day, looking at this monthly chart, have I ever seen anything like this? This kind of absolute, complete bear control. And this is the US ETF, and this is Canada CGC. And my answer is yes, I have seen this before. And we saw the crypto space pull back, 85%. It didn't look like this. It was not this prolonged, and it was not this one-sided. When we did pull back 85% in crypto, in Bitcoin, we had green months mixed in there with some bounces on the way down. I mean, there were a couple of these bounces are 50% bounces. But where else have I seen it? 3D printing. This was when I was just getting my flow state going, learning technical analysis. I was trading back in 2010, 2011, 2012, exploring, but really hit the books and got technical analysis down 2013, 2014. And this is very similar in terms of just an absolute massive run up of 1,200%. And then years, multiple years of nothing but bears. This period right here is just absolutely brutal. September 2014 to January 2016. So that's a year and 3 months of complete bear control. And we gave back, what's that, 95%? A lot of this move. And it wasn't just one company, it was the sector. SSYS did the same thing. I mean, look at this drop, 130 to 14. So it has happened before. And this was just absolute euphoria, FOMO. This is going to change the world. 3D printing's the next new everything. And then realization of, no, it's not really. I mean, it's cool and it does have its applications, but it's not a massive new industry that is going to see continued massive euphoria. But anyways, long story short, we're going to keep an eye on the cannabis space because I know there's a catalyst in voting season where we will see some states legalize rec and legalize medical. It's always good for some headlines. And anybody waiting in cash wants this sector to get as absolutely crushed as possible over the summer to then be looking for that entry. But just something I'm continuously keeping an eye on. And we know the bulls don't prove a thing as long as we're in a daily downtrend. And really for MSOS, it's the weekly downtrend since all-time highs, which is now 16 months almost of just a weekly downtrend with every single bounce a lower high. And even where we stand right now, we can bounce 30% and still just be looking for a weekly lower high to be a result of that bounce. Maybe a little less, 25%, but you get the idea. So I'm not falling asleep on this sector. You know, someone else asked me today, what would it take for you to get interested in this sector? And the answer is uptrends. US 10-year, potentially shaping up a right shoulder. Burden on bears, but this is what we were keeping an eye out for. If we set a lower high here and drop down and break 2717, we confirm a daily downtrend and further weekly consolidation. So keeping an eye on that, head and shoulders potentially shaping up. And we were watching TLT, which is trying to negate a 2-day bear flag. So keeping an eye on a little shift ongoing, but the dollar is still a raging bull, breaking both levels on that equilibrium. So we did just hit DXY, the highest level that we've seen in 19 years or so. And we do have a ton of space for a daily high or low. We're definitely looking for the dollar to consolidate on the daily time frame in the near term, but tons of space to maintain that daily uptrend, at least initially. Metal is still struggling to bounce. Gold is finally getting over 4-hour EMA 12, so this is potentially the first sign that a bounce is getting going, but silver is still much weaker. The miners bounced with the broader market today. Just going to be looking for a daily lower high on GDX as well, but we're not going to have any confidence in any bounce if gold and silver cannot confirm 4-hour trend changes back to the bulls. So aggressive bears are keeping an eye out for daily lower highs to be looking short. Looks like Apple is fading more since we've been talking here. I guess I'm the only one doing the talking. So getting that move back, we're back to flat. So uneventful for Apple, but Amazon bearish. So that is leading to a drop of over 1% in QQQ. So we'll see if we have top fishing levels to go off of tomorrow. Now that we are a good bit off of the highs of today in both SPY and QQQ, we'll see where we shape up pre-market. So psychology mindset today. So today I got my second speeding ticket ever. And again, it's going back to we choose our mindset. We choose our thoughts. We have control of that. And it has such a profound impact where if we don't realize that we have control of that, we get stuck in these negative feedback loops. And that negative mindset, negative energy can be really physically, mentally draining. And this relates to trading because we're always up in our heads, and this applies to that as well. So when I get that ticket, I could choose to blame 10 different things. I could blame the cop that pulled me over. I could blame the fact that if I wasn't late for this appointment, I wouldn't have been going faster. I was speeding. I was going 70 in a 55. The 55 could easily be a 65. It's a highway, but it's 55. I was speeding. So I could look at it and blame all these other different things and be in a really bad mood and be bummed and have it be a day ruiner and argue with the cop. Or I can accept full responsibility and say, yeah, I was speeding and this is what happens. And I recognize my ability to do that and be extremely positive and just water off the duck's back also has to do with money, where I look down at that ticket and I see the dollar amount and I can recognize that that means nothing to me in terms of big picture. That number doesn't mean anything. And I can also then recognize, so this is a positive feedback loop with all that thought process. This is my fault. I was late. I made myself late for an appointment because I didn't leave on time. I was going over the speed limit to go to that appointment. So my fault. I get the ticket. And then I realize that people are not in the same situation as me financially to be able to be just shake it off. No big deal whatsoever. And this happened to me as well, where, I booked a ticket for someone to fly and I picked the wrong day. And we realized that at the counter of the day of the flight. And so $500 mistake, there you go. And able to just laugh it off. So that leads me to empathy. So I can empathize with people that are not able to be psychologically in that mindset, because that dollar amount on that ticket is a week ruiner for somebody, and it ruins their day, and they have to go home and tell their significant other, and it's just a very negative event in their life. And it's because of that financial positioning that allows me. So again, I feel empathy for those, and then I feel gratitude. I feel gratitude for the position that I'm in. Yes, it came from a lot of hard work, but a lot of luck as well. And I have a ton of gratitude for where I am financially, thanks to markets and technical analysis. So again, in the end, it goes from acceptance and accountability of myself for making the mistakes, and empathy and gratitude. Those are the four things that I get from this experience, where it could have been anger, distress, anxiety over financials. Maybe it's going to be more difficult to pay rent and pay a bill this month. So those are two completely different mental paths to go down. And yes, some of it is choice, but some of it is also, again, the ability to shake off that monetary loss. So that's just some self-reflection on my day today. And it's nice that these days, whenever I used to get pulled over, they would always fish for me to incriminate myself with drugs. And that seems to have stopped. I used to think it was the long hair, but I think it's the car type, because I was driving around in an old Honda Civic with my life in the back, and they would fish. They would make things up to try and get me to incriminate myself. And now, these days, it's just bing, bang, boom, 3 minutes. Here you go. Here's your ticket. Thank you, sir. See ya. Boom. Gone. Didn't even have to give my registration. All right. Done rambling. Hope you had a good day. And we are seeing weakness after hours. We'll see if we get top fishing plays tomorrow. Do good things.